Hey everyone, this is a video on the Canadian real estate market outlook. So how is the Canadian real estate market doing? A lot of people on my channel are talking to me about how, the Ontario market, like Toronto, London, Windsor, other people reaching out saying, what about Calgary? What about Vancouver? How is Canadian real estate doing? What is the long-term forecast? Should I care? Should I be buying real estate? Should I be holding? What do we think overall about this inverted yield curve with the bond market right now? What is going on with interest rates? There's so many things out there I'm going to talk about in this video. What my thoughts are on an overall looming recession. Everyone keeps talking about this looming recession. So Toronto and Vancouver are actually up year over year, especially in the affordable markets, so in affordable types of properties. So condos, for so something to kind of think about. Overall, Canada, the average house in Canada is 12.6 times the median house price. By that metric alone, based on income of average Canadian, houses are overvalued there. So first things first, I'm gonna say that I invest for cash flow. So when I buy properties, I don't invest to speculate. I buy properties 80 to 90 cents on the dollar, that's my focus. I try to buy below market price as best I can and then add value through renovation. So I end up having properties that are worth often 120% of what I have invested in them. That insulates me against a recession. I'm not a speculative investor. I am, of course, a cash flow focused first investor. I think that's important for a couple of reasons. One is, in the event of a recession, what we know is that house prices may come down, demand for affordable housing. We know that the people can't afford to buy houses anymore, especially in a recession when they lose their jobs. And so house prices tend to fall. But if you're playing the long game, where you've got fixed rate mortgages, and you're a long-term cash flow rental income investor, you're most focused on whether or not you can rent your property out. And what we know is that in times of recession, vacancy rates actually tend to decrease. People need a place to live still, and barring an exodus from Canada, the real estate market will be okay. People will find a way to pay their rent. They can't afford to buy that $500,000 house, but they can afford to rent for $1,500 a month, $2,000 a month. In fact, the lower end rentals, the bachelors, 1 bedrooms, 2 bedroom, the cheaper priced real estate products in any market, talking about townhouses, lower priced condos, semi-detached properties, tend to be relatively strong in times of recessions. So if you were waiting for the next recession, besides staying in cash, you could instead invest in those types of asset classes within real estate, within your market. So that's really important, I think. The second thing is I look for a 25% return on my investment minimum, levered return on my investment. So that's on my ROI, on my 20% down payment. That's before appreciation, before any upside. That's assuming I lose that entire 20% upside of value that I added through renovation. So that insulates you another layer further. So I am a strong advocate of cash flow investing. We don't know where the market is going to go. I'm going to share some of my predictions coming up. I'm going to talk about some of the data in the Canadian housing market, specifically how we've had slow GDP growth and how interest rate environment has been changing to affect the real estate prices. So in places like, look at some of the data. So first thing I like to think about before I talk about immigration, because I think immigration is like the silver bullet that explains it all. But before we talk about that, we'll talk about actual house prices. So Toronto and Vancouver are actually up year over year, especially in the affordable markets, so in affordable types of properties. So condos, semi-detached properties, on the lower price point, the lower end of that market, there is still extremely strong demand. But what we're seeing is average days on market in places like Vancouver, in places like Toronto, for some reason not in places like London, Ontario or Windsor, Ontario. In London, Ontario, we're experiencing the shortest days on market of any city in Canada right now. I believe Windsor topped us by a day. Maybe we were tied for a bit, depending on which month you're looking at. So, Windsor and London, Ontario and Canada obviously doing very strongly. We've seen 15, 20% in certain segments of the market increasing. So depending on which area of the city you're looking at, double digit, sometimes into the 20% year over year house price. So that's amazing. And because the average days on market is so small, it's a signal that prices will continue to rise until there's an equilibrium of about 30 to 60 days average days on market for a listing. So if a property is selling that quickly, it means there's a significant demand. Specifically in my market right now, we're talking in April 2019, we're seeing properties, some properties with 50 offers on them, right? That's a signal. There are 50 buyers after that. One person is going to get this house, and there are 49 buyers ready to go who can't find a property. So there's just a demand, tons of demand and not enough supply. So simple supply and demand, we know that that's going to continue to affect prices. But there are things that can weigh down on demand. For instance, Demand could be decreased if interest rate environment was to increase. But what we know is that with the inverted yield curve, investors are betting that long term the economy is not going to, the global economy is not going to be as strong. And we also know that that inverted yield curve basically just means, guys, that people would prefer to invest in the short term because there's better short-term returns than long-term returns, hence the inverted yield curve. What that signals typically, historical data says that means we're going to go into another recession. But I don't think that's necessarily the case, and I don't know how deep this recession will be. I think a price correction is possible in Vancouver, in Toronto, in certain markets where we've seen over the last 2-3 years 30% increases in house prices. So there is some ability for correction there. Specifically, how do you determine if a market is overvalued? So why do I say a market might be overvalued? Well, I think one of the biggest signals for me is average income and median income in a city relative to house prices. So if you look at some of the data, I was recently reading a report along with some other data before I made this video, where you could see I think there was 309 urban, large urban centers, and they costed out, they ran income against the average house price. And what they found was there's a multiple, right? So the average, I think, in the US is something like I think the article said 3.5 times median income. So the average house price is 3.5 times the median income. In Vancouver, median income to house price is 22 times. That means the median, or the average person living in Vancouver, cannot afford to buy a house there. They cannot afford to own property. It's a signal that the index that they were referring to claimed that anything over 5.1 times median income was a signal that it was unaffordable. The median average person could not afford to buy a property in that market. And that was a signal that things were overvalued, because real estate's value should be tied to affordability, right, and demand. And demand should be tied to what the people are actually making. So if the data is true and people aren't just like hiding hordes of cash under their mattress, or some, we could talk about immigration, because that actually has a huge play. People come into the country with a ton of money and they actually influence the house price, so that the average person isn't actually dictating the price of the homes. But using that metric alone, of all the urban cities in the world, of all the metropolitans, Vancouver is 308 out of 309th most expensive. The only other city in the entire world that is more expensive relative to income is Hong Kong. So that gives you a bit of a signal, knowing that a lot of people in Vancouver are coming from Hong Kong. Obviously, they've bled some of that demand, some of that excess money into the Vancouver market, and it's pumped the Vancouver market way up. I think that Vancouver is not a place that I'd want to be investing. Just, again, especially on the higher end, the average house price in Vancouver, way too high, I think, relative to income. The only way it remains sustainable is people with hordes of cash from, say, China coming in to continue to buy those properties, or people who own property already in the market and rode that up from average house price of $500,000 to $2 million, right? So those people have obviously made a ton of tax-free money using their principal residence exemption. So these people have the money and they can just trade up or trade down in the market, and that's what a lot of what we're seeing, I think, is people trading up and trading down in the market who already had properties in that market. And so all the people in Vancouver that own property rode up with that rise and created this artificial wealth, such that the average Vancouver citizen has a net worth of over $1 million. That's the average. Obviously, not the median, but the average. So that's pretty crazy. Same in Toronto. The average Toronto resident has over $1 million net worth as well. So that's some pretty startling data, that it was mostly from the real estate market, and could be a signal we're in a boom. Toronto, now you want to hear the data for Toronto, 8.3 times, I believe, was the multiple. So 5.1 times being the kind of line we have to cross to get into the overvalued territory. Because Canadians have so much household debt, there is a risk, I think, of default. It is low, historically, like 1 to 3% is the default rate. So, I mean, it's not going to be a high default rate, I don't think. Canadians are fairly good at being able to make their debt payments currently. And I think that one thing that helps this is interest rates. So the interest rate environment currently is, we're not going anywhere. We're not going to have any more hikes, I don't think. And in fact, if you look at the inverted yield bond curve, we've had some recent hikes. You guys have been following. Bank of Canada has increased interest rates several times now. And I believe that if you look at what the data is telling us, the global economy is slowing down. The Canadian economy had like 0.3% GDP increase last quarter. So we're not seeing the kind of growth that we'd expect. The housing market, average days on market in Vancouver and Toronto is way up. I know a lot of the headlines you're reading that like Vancouver's down, Toronto's down. They're not really down if you actually look at what is selling. what we're seeing is that average days on market is increasing. So we got a lot of buyers still interested in buying, but lowballing on properties, and sellers who, are obviously emotional. Most people own real estate. It's emotional, right? That's why I make so much money, because I can arbitrage the emotion. But most people have lived in their house for a long time, got a lot of sentimental, emotional value, and they see their neighbor's house last year sold for $2.5 million, say in Vancouver. They're not going to sell their house for less than 2.5 because they're anchored. They have this anchor bias of the $2.5 million house next door. So even if the market comes down and no one's offering on houses, they will hold strong at their sale price, which is why we're not seeing a decline in actual sale. We're seeing a decline in number of transactions going through. Not as many transactions are going through. In fact, if you look at the data, I think for February and March, places like Vancouver and Toronto, we're seeing 25-year lows for the average days on market and amount of volume of transactions. So there are a lot of people who are basically just bidding, and the ask price isn't coming down. What it's a signal of, though, if that continues, that sentiment in the market continues, we will see a decrease in price in Vancouver and Toronto, because people will eventually have to sell, and those lowball offers will eventually be accepted, and we'll see that, as that starts to happen, as the neighbor sees someone else's house sell for 2.3, then they anchor on that, and it basically just takes time for the average homeowner to find out. I remember when we were in the big boom, like 3-4 years ago, I was going to private sellers and they didn't realize we were in a market boom. And I knew people who were wholesalers were going in and buying properties, significant discounts. People didn't know the market had appreciated 20% year over year. And so they thought their house was still worth what they saw their neighbor's house sell for a year ago. The same is true when you have a declining market. It takes the average Canadian a while to realize that house prices have fallen, right? So it takes a while for them to realize that, okay, I need to drop my list price on this house. I need to expect less. So right now they're stuck on this anchoring bias of this really strong real estate boom we just experienced for the last, honestly, like 10 years. But the last 3 years specifically have been really, really strong, last 3 to 5 years. So that's something to kind of look out for. And if you're going to be investing in places like Vancouver and Toronto, keep that in mind. I think you shouldn't be investing for speculation. I think you're probably better in Vancouver specifically to be rent hacking. Go and rent a place out. Often you can rent a $2 million house and control that asset for less than the mortgage payment would be. Forget property taxes, utilities, insurance, all of the maintenance costs of owning that property. You could literally live in that property for less just by renting. So that's, I'm a big fan of renting in those markets where affordability makes it such that it's way better to rent. Even if you have the money to buy, don't buy in those markets. And if you're a speculative investor, I would have a hard time gambling over gentrification or increased house prices in places like Vancouver and Toronto right about now. That's why I said I'm a cash flow investor first. I think you have to look at all the market fundamentals, but let's talk specifically about what might make the Canadian market strong. So I'm getting into a little bit more of that towards the latter half. We look at the immigration reports. The Canadian government is moving towards allowing 330,800 was the target for 2019, 340,000, 350,000 new immigrants into Canada. That's around 1% of our population each year. So that's a really good sign. If we continue to bring in an additional 1% to our population from immigration, that's really strong. And if you dig into the data, what you see is around 80, I think it was like 84% of those are of decent educational background and of strong economic status. So they at least have some sort of skill from the country they're coming from. 16% are unfortunately refugees. I'm not a huge fan of taking in refugees only because they do drag down the economy. They tend to have a highest probability of committing crimes, highest probability of, unfortunately, a number of negative things for our GDP. If you bring in the wealthiest immigrants, it actually boosts GDP a ton because they build businesses. They buy real estate and they invest money heavily to renovate it, which blows up our Canadian economy. The Canadian economy and GDP is strongly, strongly tied to the real estate sector. So, for instance, all the construction associated with all of that, right? All the services associated with maintaining property. There's obviously brokerages and firms and lawyers and accountants and all of these things that are attached to buying and selling of property. So the real estate market in general, when it's in a boom, people can go refinance, get more money, and invest that into things like home improvement and et cetera, and even actually borrow against their property to invest in businesses, which creates jobs for the economy. So a strong real estate economy, again, caused strongly by immigration. So the more people coming into the country, the more demand for rental. That's why we have 1% vacancy in London, Ontario, because we took in thousands of those immigrants right here in London, Ontario. We took in a higher percentage based on our population than even places like Vancouver and Toronto. We're seeing like a very high proportion here in London, which is a good thing. We took a lot of Syrian refugees in, for instance, as well, and the government funded their rent. So as a landlord, I was really happy with that data. And you know, when I read that, I was like, okay, that's good. That's going to drive up our rental. Same when minimum wage went up to $14 here in Ontario. That drove up the rental prices, and we're seeing that. In some markets, we're seeing market rents up 20% year over year. Vancouver, market rents way up because people don't want to take the risk, so they need to have more rent to basically cover all of their expenses, right? So if they buy these expensive properties and they rent them out super cheap, they're not going to have a good spread for profitability. In fact, most people in Vancouver that own property are cash flow negative, and so that's something to kind of be wary of when you're investing. If you're putting money into your investment hoping for speculation or appreciation, that's a relatively risky play, in my opinion. So something to kind of think about. Overall, Canada, 12.6 times median income. So the average house in Canada is 12.6 times the median house price. So that's really important data to look at. That means that by that metric alone, based on income of average Canadian, houses are overvalued. They're more expensive than people can afford. That could be a signal, right? Unless we bring in more immigration and bring in more fresh money into Canada. Bottom line is, I think that Canada is going to continue to bring people in. It's going to continue to be, I believe it's top 3 countries in the world to live in. It was by one index I read, top 10 countries to live in the world to live in Canada. So as long as Canada stays a desirable place to live with many great natural resources, I think that we're going to be our real estate market will be very strong as long as we continue to take people in and there's not a mass exodus, right? Because in a recession, barring a mass exodus, rents tend to be strong and stable. People who rely on cash flow are just fine. They don't care about the price of their house because they're getting $1,000 a month positive cash flow. I know in London, Ontario, I get $1,000 a month positive cash flow on my properties minimum. I have properties in the $400,000 or $500,000 range that generate $2,000, $3,000 a month in positive cash flow. Even if I had a unit vacant, I would still be positive cash flow. Even in a recession, in a worst case scenario, where maybe rents drop 5%, which actually I think will happen in a recession is rents will actually remain relatively stable and demand for rental accommodations will be even higher than it was before. So if you look at the 2008-2009 recession when house prices were crashing, rental demand remained strong. People were walking away from their mortgages, their subprime, ninja mortgages, and they were walking into rentals. They needed somewhere to live at the end of the day. And so landlords did just fine throughout the last recession if they bought smart and they had strong cash flow. It was the flippers that got slaughtered. It was the speculators that got slaughtered. And again, if we go into another recession, I don't have a crystal ball. The data is suggesting that I think interest rates will come down in the near future, so it might be a good time to buy in the near future. I don't think now is a good time to buy a ton of real estate for speculation. I think for cash flow, there's still a ton of opportunity. And I'm still buying a property a week here in London, Ontario for cash flow purposes. Now, I'm buying under market, so I'm insulated. If market drops 10%, I'm still above water because I'm buying smart. I'm not just buying Realtor.ca MLS properties. Now, I do buy some of those too, and there are still tons of deals on the open market, but the best deals that I've found have been off-market wholesalers bringing me properties and assigning them to me. So kind of making sure you're focused on cash flow first. That's the takeaway here. And a lot of the data is suggesting that we do have a bit of worry. I think that the market could see a bit of a pullback. I don't see a huge recession kind of coming on because Canada is a desirable place to live, and immigration trends are such that we're going to continue to see more and more people coming into Canada, and that's going to continue to drive house prices up. Specifically, if the Conservative government wins the next election, they are pro-immigration actually, but pro-wealthy immigration. So they have put stipulations like $1 million net worth minimum to come into the country, and you have to buy a business and employ a certain number of people. I'm all for that kind of legislation. Come here, if you have money, you have to come here and you have to create jobs. You come here and you employ 10 people, come to our country, please. We will take 10,000 of you guys from China who will create businesses and build our economy because that's overall good for our economy. So barring that, I think immigration trends look good. There's going to be no mass exodus from Canada. So I don't see vacancy rates coming down. I don't see rents coming down. I do see house prices correcting a little bit because of the affordability issues that we're seeing. I do think that, if the economy if we were to see higher interest rates, that could dampen real estate prices. An extra 1% on the Bank of Canada prime interest rate right now would obviously have like a 5 to 10% decrease in the average house price. So that's not a good sign. However, it looks like we're going into a recession based on the signals. So I think the bond market's the investors are betting on actually a recession where we're going to drop interest rates to stimulate the economy, right? When the government drops the interest rate, what we're going to see is that there's going to be a ton of stimulus, right? People want to go borrow when interest rates come down. And so that'll just fuel the economy further. they've increased prime, in my opinion, to prepare for the next recession. That's why over the last year, we see the Bank of Canada increase the interest rate, because they know that when we go into the next recession, they're going to need to have some lever to play to re-stimulate the economy. And so they're going to drop prime just like they did in 2009, 2010, when we had this super low interest rate environment. That is coming back. I am overall extremely bullish for the next recession. We've got a pool of cash and a pool of investors ready to go to buy property at the next point of recession, because we're going to get a ton of cheap debt. What we end up seeing is that institutions during recessions tend to tighten up. A lot of the signals we're seeing in the market, the banks are actually tightening up right now. That inverted yield curve incentivizes the bank to not want to lend. They don't want to lend long term because the rates are better short term. So banks are going to tighten up their credit. That could be a catalyst for a bit of a recession in places like Vancouver, Toronto, maybe Calgary, some other big markets. I think London's still relatively affordable, so my market here in London, Ontario is pretty safe overall, but we have seen some crazy appreciation. And certain segments of my market, specifically the new build segment, I think is overvalued right now. So I'm not very bullish on the new build properties. I am very bullish on buying a ton of properties below replacement cost. Just bought a property, a single family, detached, story and a half for $125,000 here. Average house price is 500 and something thousand for a two-story detached house. So average house price $500,000 and buying at $125,000, that's a huge discount. I couldn't even build the property for that. So buying below replacement cost still makes sense even in a booming market, because we are obviously in London, Ontario in a big booming market. Toronto and Vancouver less so. They're obviously in a bit of a recession now. We've seen some of the data signaling that there's higher average days on market. So hopefully this rant or this ramble helps some of my subscribers out. I wish I had had the time to sit down and plan it out better, but I just did a bit of research and wanted to share some of my thoughts on the Canadian real estate market and why you should invest for cash flow. So hit me up in the comments. Let me know what you guys are doing. Are you buying in Toronto? Are you buying in Vancouver? Are you looking to sell? The question you have to ask yourself, if you're going to sell your real estate, right? Because a lot of people coming out of this video are going to say, okay, Mike's saying we might go into another recession. The data seems to suggest we may go into another recession. We could see 5, 10, 15% drop in house prices in places like Toronto or Vancouver, the bigger metropolitan markets that are overvalued based on income metrics. Should I sell? The question I have to ask you is this: would you buy your property right now on the open market for what it's worth? If the answer is no, you should sell. So if your property is worth, and obviously factor in closing costs, but if your property is worth $3 million and you say, I would not buy my property for $3 million to rent it out for like $3,000 a month, like some low negative cash flow, I would never buy that property. Well, why do you hold on to it? Emotion is the reason, and I don't want you to be clouded as an investor in real estate based on emotion. Too many investors get clouded by the emotion, clouded on the buy and hold forever sentiment. You should rebalance your real estate portfolio. Obviously, don't make, I think that it's dumb to make decisions based on a little bit of data like this to say, we might go into another recession, so I should sell my real estate portfolio. Don't be irrational like that, but look at the overall long-term trajectory. We know real estate's going to continue to do one thing, and that's go up. We don't know each year what it's going to do, but 20 years from now, I know house prices will be higher than they were before. And so that's something to kind of think about. If you can rebalance your portfolio, you can sell one property worth $3 million and buy another one that rents for the same amount for 1.9 in Vancouver, or maybe you're in Toronto and you can sell your house for $1 million and buy 10 houses in London with that capital. That might be a smart rebalance of your portfolio, and it might be a good time to sell because we haven't seen the drop in prices that I think is yet to come. Based on the signals, we're seeing that average days on market is growing in places like Vancouver and Toronto, 25-year lows. So we haven't seen this since the late 80s when we had the last sort of recession in Toronto. Real estate prices, they were flat and negative in around 89 to 91. So that data could be going through something like that. Not a major recession, but a bit of a cool down for the next 2 or 3 years. And imagine if you bought a property that was cash flow negative in Toronto or Vancouver, and for the next 4 years, you had negative appreciation and you were losing every single month. I'd much rather be in a position where long-term would be just fine, but I'm getting $1,000 a month in the bank, net of all my expenses. That's how I like to invest as a real estate investor, and I hope you follow the same sort of tenets. I'd love to hear in the comments what you think about that. Let's have an open dialogue. I will jump in the comments and respond to every single comment on this video about what I think and what you think, and we'll kind of come together. Maybe I'm wrong. Maybe Vancouver's going to do just fine, but if you don't have cash flow, I mean, you're kind of gambling. It's sort of speculation, so that's why I'm not a fan of it, but teach their own. Thank you all for watching this video, and I look forward to seeing you in the comments. Remember, secret to unlocking wealth for you is to spend less, earn more, and maximize your returns. Bye guys, Mike Rosehart out.